Welcome back to my channel. In this video, I'm going to go through and value a company using the earnings per share forecast that a company has. In this example, I'm going to use Intel and go through a step-by-step process of establishing a value that I believe Intel is worth using their earnings per share. Earnings per share intrinsic valuations are used quite often by many investors. And I use both the value based on earnings per share, and I also use a discounted free cash flow valuation method. I did a discounted value based on cash flows on a separate video, and you can take a look at that if you'd like. For this video, I'm going to focus on earnings per share. Earnings per share valuations are very typical. Every company has to report their earnings per share every quarter. Analysts are actively looking at the forecast of what they expect the company is going to do from an earnings per share perspective. So the information available to do this is plentiful. And I'm going to go through my favorite website where I can get that information and share that with you. I'll put together my valuation and determine whether this stock is discounted, being sold at a fair price, or being sold at a premium. I'll also share with you my intent with Intel, whether I'm going to buy shares, hold, or sell my shares. I'm currently an Intel stockholder. I will also share my current investment in Intel, show you what performance I have with this stock and what I expect out of this company. So let's get into Intel and I'll go through the process. Before I do so, one just reminder is in my channel, I just share my experience and my journey as an individual investor. I never give financial advice and I never give investment recommendations. I'm not recommending you buy Intel or sell Intel. I never recommend you buy or sell any stock that I ever cover. I'm just sharing my experience as an individual stockholder. I've created a model for valuing Intel and other companies based on earnings per share, and it follows this formula that the intrinsic value is going to be equal to earnings per share times 1 plus the growth rate times the PE ratio. It's quite simple, and I like it simple. I hate mathematics that I don't understand because then I get lost in them. In this case here, this is very clear, and I can move the variables as I expect them. They're going to come in, for example, earnings per share, PE, and the growth rate. Based on that formula, I'm using earnings per share of $1.37. I'm going to show you my favorite website where I get that information, a forecast that many analysts are putting out there. And this is the average forecast that's expected for 2024. A P of 24, that's a decision on my part. I think highly of Intel. I think it's a great semiconductor company that is going to come back. And I believe a 24 is what I'm willing to pay for this stock. And I think they're going to grow their earnings per share quite fast. And you'll see in the forecast that I'm going to show you that they are expected to grow very quickly. Based on those variables in this formula, I get to an individual stock price value of $42.74. That's the value that I believe Intel is worth based on the earnings per share. Their stock price is currently traded at $31.65. So there's a good $11 discount on Intel, representing a 35% discount on this stock. So it looks attractive from a discount perspective. Now let me show you where I got this information from my favorite website. There are many websites where you can get earnings per share information, forecast, all kinds of information, CNBC, Yahoo Finance, and many others. The reason I like stockanalysis.com is it's very simple, elegant, free of a bunch of advertisements. CNBC and Yahoo, there's advertisements everywhere. It's quite distracting. So I really like this website and use it quite a bit. Within the website, you can see that it'll give you all the information around market cap, dividend rate, when earnings are going to be calculated or presented. But I'm going to focus on the forecast. And analysts, many of them, a total of 32 analysts are covering Intel. And there's a forecast for earnings per share. This year in 2024, it's expected that the company is going to produce $1.37 per share. And that is growing from last year quite a bit. So more than doubled from last year, actually tripled from last year. But in 25, it's expected to grow 66% up to $2.29. And then in 26, another nice growth rate up to $3, and that's a 33% growth rate. And then 27, another aggressive growth rate. So the growth of earnings per share for Intel looks really good. So that looks really favorable. And this is where I get the data that you saw in that spreadsheet of $1.37 for earnings per share. And I'm able to estimate a growth rate of 30%. And that's a decision on my behalf of what I wanted to put in the model. With regards to price earnings, that is a decision that I'm making. And it's really based on the fact that the PE for semiconductor companies, if you look at NVIDIA, it's about 25. And that's on a very aggressive forward earnings expectation. But if you look at Broadcom and others, it's a very high PE. So going with the 24 is not far off from their forward PE, and I think is a very good PE to go with. So that's where I got the information to complete my valuation using earnings per share. Now, I valued Intel, but I don't make decisions on stocks just by looking at the discount that's available on a stock. I like it to look at the quality of the company, if I believe in the company, if I believe in their business plan, and so forth. With Intel, do I believe in their comeback? Do I believe that they're in an industry I want to be in? And the answer is yes. I have very high respect for Intel. I think their culture is a good one. They have been really having a few tough years, most definitely, but I think they're going to come back. In certain industries that they're really good at, those industries aren't really prosperous, but they will be maybe in toward the latter part of 2024 and in 25 and 26. So I'm really bought into the company. I like that they switched out the CEOs, and the new CEO, although he's making some very difficult decisions and it's been a little bit of a tough road that he's had to follow, I think he's the right man for the job. And I think he's going to see this through, and eventually the company will, get back to the heyday, to the great years that it once had. The debt is less than 3 times EBITDA, which is very important. Intel does have a good balance sheet, and a good discount exists on the stock. So all the check marks exist on this investment, and I'm willing to buy more shares in Intel. I bought today, they announced their earnings, and the stock went down, almost 10%. And I gladly bought more shares. I think this is a rebound story. And I like these stories because usually companies get discounted far beyond where they should be discounted. And I'm glad to pick up more shares in Intel. They pay a nice dividend, not the biggest dividend in the world, but I like their dividend. My investment in Intel is currently underwater. I'm losing money, unrealized losses of $610. My investment is of $4,238, and the current value of my stock is $3,628. So it's a 14% loss that's unrealized. The dividend rate is 1.6%, a pretty low dividend for a semiconductor company. But I think over time, as they get better, especially those high earnings per share, they'll probably raise that dividend rate. Overall, I'm buying into Intel as they discount, the stock price, the market does. And the almost 10% drop that we saw today is included in that 14% unrealized loss for Intel. The idea to create a few videos showing how I value companies step by step came out of a live stream that I conducted a few days ago. And I appreciate the comment that one of the viewers put out there. I hope you found the video interesting, and I'd love to hear your comments on how I can improve the video and what types of videos you would find interesting and valuable. I hope you found it interesting, and good luck investing in the rest of 2024.